All right, so today is Tuesday, September 13th, about halfway through the month of September. I want to take a look at where we are in terms of our charts. What I find is as an interesting pattern. We're going to look at the AbleTrend charts here just in just a minute, but we've been in a declining pattern, a declining sea of red bars and green bars on SPX since we started today's trading. And generally, and Michael, you're really good about pointing this out, generally about 2 hours um, is about how long a trend will last. It can go longer, right?
Oh
Uh,
yeah. Oh, most
sometimes
definitely.
sometimes shorter, but 2 hours is a good benchmark. In fact, I'd even say an hour and a half that you need to start being alert to the possibility that the trend may shift. And that corresponds perfectly with what we talk about all the time in terms of cycles. Indexes cycle. Indexes do not go straight down, they do not go straight up. You may argue that there are individual days where it feels like all it does is go straight down. Well, that's going to occur. But in the bigger scheme of things, you're going to have declining cycles, you're going to have rising cycles intraday. No matter which direction the market is trending, you're going to have cycles that move in both directions. Even today, even though we've been pretty much trending lower, there have been movements, small amounts of movements higher and small amounts of movements lower. And if I were to go to a 10-minute chart, you're going to see what I'm talking about. Well, in fact, let me just get to a 5-minute chart here. And you can see here that there are movements higher, right? Strong movement down, get a little bit of movement higher, movement down, a little bit of movement higher, movement down, a little bit of movement higher. And you shouldn't dismiss those movements, which at least on this chart appear to be relatively small, because if you're an active trader, as most of you are in our live trading room, those can be some excellent opportunities for profits. Now, we use the AbleTrend signals, the 3 9-minute and the 5 15-minute, for the majority of all of our entries. And we're looking for a relatively quick profit. We subscribe to the philosophy of lots of base hits, lots of small profits, recycle your capital multiple times, and that's how you end up achieving an overall growth that is much bigger than what you're going to get most anywhere else, but always using the same amount of capital. So the cycles occur, and one of the things I'm looking at, Michael, is I'm going to just say I won't be surprised. I'm not predicting this, so I want to be very careful about the language I'm using here. I'm not predicting this, but I will not at all be surprised if, even though we've had a pretty steady declining pattern today, but I won't be surprised if we see a movement higher before the end of the day. And I mean a more significant movement higher. And the reason is because we have a pretty significant Bollinger Band snap pattern on our 1-year daily chart. We're actually trading right down at the 3 standard deviation Bollinger Band on the daily chart, which means we're well below the 2 standard. So the 2 standard right now is printing at 21.39. We're trading at 21.26. The 3 standard lower is 21.22. So we're right just about 4 points up off of the 3 standard deviation Bollinger Band. Now, this Bollinger Band snap pattern occurred on Friday, and we closed below the Bollinger Bands. Yesterday, we had a nice little rally, but it wasn't enough to move back up to our line of resistance. And this is what I was pointing out yesterday. We could possibly, yesterday when I was talking, could possibly have moved up to resistance as we identified it across these 3 natural levels of resistance. And that would have taken us up, maybe around the 21.85 range, but we didn't see that. What we saw is that the market moved lower today back into this Bollinger Band snap pattern. Now, the Bollinger Band snap pattern does not follow through in terms of a snap 100% of the time, but it's such a high percentage of frequency that it is in my opinion, a very good tradable pattern. And when you see a Bollinger Band snap pattern on the daily chart, you shouldn't just naturally assume it's going to immediately snap back higher. Sometimes it takes a little bit. Sometimes it takes a few days. But this type of a pattern is a good indication that there is a high likelihood that you're going to see a cycle higher before we see another cycle lower. So we're just going to have to wait and let AbleTrend tell us where the entry points are. This channel that I've identified is primarily being identified from the three levels of resistance, the three natural levels of resistance. These are price points where the market moved up to a high and then moved away from it. All the price points leading up to it and all the price points leading away from it are lower. That makes that a fractal. So if we wanted to move higher, if we broke above that fractal, it may indicate that we're no longer in a declining pattern. We may actually start to move more significantly to the upside. So those three levels of resistance, and then capturing yesterday's natural level of support, and then just kind of projecting back, and this is what we're seeing right now. This channel is subject to change as additional price points develop. I don't know if we're just going to fall off more dramatically, if we're going to follow this pattern, if we're going to validate support and move back up to resistance, which could take us back up around the 2183 range. I don't know any of that. I can't tell you exactly what the market's going to do. I can only tell you what the patterns are that are developing. And it's not our job to figure out what the market's going to do. It's our job as traders to figure out what the patterns are showing us based on historical patterns and based on the integrity of the signals that we are shown on our AbleTrend charts. And you want to take those signals with confidence. You don't want to overthink it too much. You don't want to dismiss the signal because you've got 15 other things that tell you that maybe you shouldn't take that signal. You really want to be in a place, I believe, where you want to take the signals, you want to take the entry signals, but your confidence in taking the signal is that you know when you're going to take yourself out of the trade if, in fact, the index starts to reverse on you. And the second thing is you know how to manage the trade if the index reverses on you and moves in the wrong direction. So as long as you have confidence in understanding how to manage a trade, when your cutoff point is, then you can take the trade signals and the entry signals with confidence. You don't have to overthink it. Far too many traders, I believe, overthink. Janet Yellen's about to speak, Fed minutes are coming out, some economic data report, the jobs report is coming out, president's going to talk about something, something's going on in China. They start to just pile on all this data that actually becomes irrelevant in being able to identify a trade. So if you understand how to manage your trades, if you understand how to adjust your trades, then you should feel confident in taking the signals and doing the work that's necessary. I personally believe you're going to be better off in the long run if you just follow the signals as they're presented to you. Get confident with the AbleTrend charts, which we're going to show you here in just a minute. The 3 9-minute charts, the 5 15-minute charts, understand how to interpret them and take the signals and enjoy some profits. So this is SPX. We actually did a trade today using our new margin buster strategy. It worked out quite nicely, did a day trade on that and took a little bit better than a 10% return today, have our capital back. Let's take a look at NDX. NDX, not quite the same as SPX, which is something I find interesting. We had a pretty strong Bollinger Band snap pattern on Friday, continued through yesterday, and then snapped back higher. Pretty significant snap, moving from a low of 46.56 to a high of 47.72. That's a pretty strong movement yesterday. And then today, we're trading right at the lower 2 standard deviation Bollinger Band. So this pattern by itself doesn't really give me any indication that there's a stronger bias to the upside or a stronger bias to the downside. I would rely entirely on AbleTrend charts. I wouldn't be taking a trade here, I wouldn't be using this information to take a trade. I'd be using this information to have a better understanding of where we're trading relative to the long-term pattern. On SPX, I would consider actually taking a rising bias trade just simply based on the Bollinger Band snap pattern that we see. And then on RUT, same, reasonably similar to the other two indexes. We had a Bollinger Band snap, slight Bollinger Band snap on Friday, continued on with a more extensive one yesterday. Same bounce back that we got, that we saw on both SPX and NDX. And then today, we're actually trading right at this line of support. This line of support is about to either be broken or validated. And if I pay attention to the Bollinger Band snap pattern, it looks to me like RET could potentially move higher before it moves lower if it wants to continue moving lower. But that's uncertain right now because we do have a line of support that's tied to a line of resistance up here. All of these are natural levels of support and resistance, and the fact that we have a pretty strong Bollinger Band snap on RET right now tells me that there is some bias to the upside. Now, one thing I want to do here before we jump over to the AbleTrend charts is I want to take a look at some of our other studies which help give us additional clues as to which direction it could possibly move from here, or where the weight of the market is moving. Is there thrust and energy to move to the upside? Is there weight and some forces moving it to the downside? Well, when I look at RUT on the 1-year daily and I look at the AO is showing a declining Twin Peaks pattern. And what that means is very simply there is weakening momentum, and there has been weakening momentum since back, let me just see, it started here, 43.65. Yeah, the weakening momentum started back on the 18th of July, and it's been weakening ever since. When you have weakening momentum and during the same period of time price is rising, eventually you're going to have the price snap back lower because price cannot continue to rise consistently without some sort of momentum. And we've seen a pretty consistent pattern of weakening momentum here. Let's see here. We also have a set of breakout signals on our MACD and our stochastics and our moving average. We have 3 breakout signals that are all aligning, that are breaking out to the downside. There is one conflict here that shows a breakout signal to the upside on the moving average, but what I look for is a set of 3 that are all aligned, and so the last full set of signals is all aligned to the downside. That does not mean, and I want to be very careful about this, that does not mean we won't move higher first. But what the pattern in the big picture is telling me is that we could likely move lower because of weakening momentum, breakout signals to the downside. But in a declining pattern, in the potential of a declining pattern, you will have rising cycles. And this is where you want to be, want to get comfortable with taking those rising signals that you see, because they're going to be some of your best opportunities for profit. I'm going to jump back to the other 2 indexes real quick and put the other studies on. And here on SPX 1-year daily, wow, not only have we had declining momentum since the 21st of July, during that same period of time, we had pretty much rising price. We've now crossed over the 0 line on the AO, and a 0 line crossover is a weakening pattern all by itself. That's an indicator all by itself of weakness. So this is telling me, oh, and I see that we have 3 breakout signals to the downside on our MACD, stochastics, and moving average. This is telling me that there is still weakness. Now, Michael and I were talking a little while ago, and we're looking at the long-term AbleTrend charts. Long-term AbleTrend charts are also showing weakness. But again, it doesn't mean that we won't see some cycle movement higher before we continue to see the trend lower. Separate in your view of your charts the trend from the cycle. The trend can be moving higher but you can have both declining and rising cycles. In fact, you will. The trend can be moving lower, but you will have both rising and declining cycles. So if I take the studies off here for a minute and focus just on the channel, we could move from where we're trading right now at 2131 up to, let's just say, 2185. We can move up to that, but we would still be in a declining trend. And the things that indicate that are the technicals that I just shared with you, the AO, the zero line crossover, the declining Twin Peaks pattern, the breakout signals to the downside on moving average, stochastics, and MACD. Those are the things that are indicating the trend. And also the angle of our channel, which is identified by both natural levels of support and natural levels of resistance. So the trend is lower, but if we moved higher up to 2185, that's where a lot of people start getting confused. They think that the trend, they might have misread the trend, or there is something wrong with their signals. Well, that's not the case at all. You just have to remember all the time that you're going to have rising cycles and declining cycles within whatever directional trend you may be tracking. And let's just take a look at the studies here real quick on NDX. And you can see here also that declining Twin Peaks pattern starting back around the first part of August. And today we have a zero line crossover on NDX. That zero line crossover is a pretty strong technical indicator all by itself of weakness. And we are seeing, the way I've interpreted the channel, we're seeing a pretty strong declining trend, the way we've identified the channel, the way I have. But we're trading pretty much in the middle of that channel. So could we move lower? Absolutely, which means we would need to press inside the Bollinger Bands, outside the Bollinger Bands. Could we move higher? Absolutely. I don't know yet that this is a valid level of resistance. I think that this pattern is a little suspect and may take a few more days, a few more price points for me to really identify what that pattern is. But we'll wait and we'll do the work necessary to identify that. Just a couple of stocks here real quick. Amazon is one that I was looking at yesterday. We're right in the middle of a rising channel. Nothing unusual there. Let's put the studies on. Studies are showing declining Twin Peaks pattern, but it's not a significant drop-off in momentum. Looks like there's more weakness building than strength, and we have 3 breakout signals to the downside. We'll have to see. That could just mean that we'll see the index move back down to support, which would be maybe around the 729 level. We'll just have to wait and see. If you like trading Amazon, Priceline is another one. Declining Twin Peaks pattern, meaning weakening momentum. Breakout signals to the downside. That's the last full set of breakout signals, the trio of them. And we're trading right at where we've identified support. Happens to be not really at either Bollinger Band. It's a little closer to the lower Bollinger Band than the upper, but we could continue to trade in this type of a range for quite some time. It's got no significant upward bias or declining bias to it. And then let's look at CMG. CMG actually is showing some rising momentum, which shouldn't be too much of a surprise. We have it trading right at the 10 and 30-day moving average. And if you look at the long-term pattern on CMG, it's really trading at support, in the area of support of its 5-year pattern. And you can see that the AO has actually been building, showing a rising Twin Peaks pattern based on that 5-year weekly pattern. So Chipotle looks like it may have some room to move to the upside. I don't know if it's got signals yet that I would want to trade. Let me just look here. I'd have to look at the AbleTrend charts, and when Michael takes us through AbleTrend, we'll take a look at CMG as one of our stocks. And then ISRG is one I wanted to just take a quick look at. ISRG looks like it's in a declining pattern, and our pattern's pretty much following along in line with the Bollinger Bands. But we do have a Bollinger Band snap pattern today. This is the third day in a row, much like the indexes, where we're seeing a Bollinger Band snap. So it wouldn't surprise me, again, I'm not predicting this, but it wouldn't surprise me to see that move higher, back up into that declining pattern. And let's see what the studies are telling us. Oh yeah. So the studies are telling me that we've got extreme fall off in momentum, to a point where it's almost flat, and the AO is below the zero line. That tells me that ISRG's got a lot of weakness to it. That could change, but this Bollinger Band snap pattern tells me that we could cycle higher within a weakening pattern. So nothing really unusual today. SPX has been my focus today, because I'm validating our new margin buster strategy, which we talked about in the live trading room today. And I wouldn't be surprised to see SPX move higher. Maybe if it just moved higher up to the 2 standard deviation Bollinger Band, which would be around the 2140 level. So that's my view. Michael, can we jump over to you and have you walk us through the corresponding AbleTrend charts, starting with the longer time periods?
Yeah, let me hold on one second, folks. Get to the right screen here really quick. I want to jump right to ISRG because that's fresh on my mind and what you showed. So, did that surprise you? Look at that chart. Look at your bar chart. Look at the sell signal on the 9th, which was back last week.
Mm-hmm.
And then you see what happened, and you can just see it. I mean, it's just obvious what's
Mm-hmm.
going on here. I mean, even if you went, this happened on the night too on the daily, and we continued. It pulled back a little bit like it always does on the Bollinger Band, but I mean, it's weak. It looks weak to me.
Yeah, so that corresponds perfectly to the bar chart, but also, as we mentioned yesterday, the Bollinger Band snap pattern, which tells me that we could move higher, is not in conflict with what I see on AbleTrend, because we could move higher back up to the sweet spot,
Yes,
right? So if we
that's right.
move back higher up to the sweet spot, that could possibly satisfy the Bollinger Band snap pattern, which we see on the bar chart, before we
Yes,
turn and head lower.
yes. Agreed. Agreed. Okay, let me get over these other charts really quick. Let's start out with IndieX. You want to do that?
Sure, that's
Okay,
great.
with you. Okay. And NDX, while you were speaking, you just got this knack. I don't know what it is, but you start speaking, we get a buy signal to go in at 47.17, and it runs to 47.25. So I don't know what to say about that, but I think it's next time you do that, I'm going to get my order ready. But that's all I can say. I mean, it happened yesterday, happening in the day, which is great. I mean, which is great.
If the only thing that would move the market would be me talking, I'd be happy to talk a lot.
I understand. But anyway, so while you were talking, and you mentioned about the trend, I think in your presentation on the charts, and you can see that we got that buy signal about an hour and 2 hours and a half into the market, and then there it went. It goes to the upside. It does not mean it's going to come lower. It could be down here at 4,700 or lower by the end of the day, but still, you need to pay attention to that. So, which is good stuff. Really good
Yeah,
stuff.
and is it fair, Michael? An hour and a half to 2.5 hours, somewhere in that
Yeah.
range. You can
Yes.
almost, not 100% of the time, but almost always count on some sort of a reverse indication.
That's right. That's exactly right. You sure can. Move down to the 3090. Of course, this is today's. We've got resistance. It's printing. We're trapped in between support and resistance. It'll break out one way or the other, and it's a pretty good range. It's about 30 points or so. So it won't stay here. It'll break out. I don't know which way it's going to go. I really don't know. But if you look at the 60-minute chart, it looks like it's going to continue to go down because we've got 180-minute resistance. 60-minute is stopped, but still a little bit of weakness there. Still, it looks like to me. And then you go down to the course of 120 daily, you've got support at 46.76 and resistance at 48.23. So trapped in between, to be honest. Pretty good range there, of course, but we're still in between. So that's what I see on NDX. Really, I really don't know which way yet. To be honest with you, I don't. As far as the long term goes, because we're in between.
But the good news is, I take everything that I'm seeing here in the short term and the long term patterns on AbleTrend, and there's not really any conflict. There's not a confusing conflict between what I see in the bar charts and here. So I
Mm-hmm.
want to use AbleTrend for my entry signals, and because it's going to be a lot more precise and a lot more accurate than just following the bars on my chart. But that big picture, that that macro view that I like to take on the bar charts, it's all corresponding to what we're seeing here. And
Yes.
for me, Michael, that gives me a lot of peace of mind that I can
Yes.
take a trade with confidence because I kind of understand the whole view. And I can take a trade with confidence because I know how to manage it if I need to. And I can take a trade of confidence because I know that I'm going to cut the trade off at some point, and I know what that point is. I know what my
That's
stop
right.
is.
That's right. That's exactly right. Flip over the SPX. Let me refresh to make sure. We got a little sell signal on that this morning. And of course, the SPX give a buy signal in 3 minute, just exactly the same time the NDX did, and we've moved back up to support. Now we're pulling right back to, it's resistance. Now we're pulling right back to support. So no surprise there, because if you look at the 30-minute chart, which is the next time period that we track on the longer time frame, had a sell signal, but we actually got double confirmation. Actually got triple, to be honest, because you've got the 90, the 30, and now you got a red sell signal. So it looks weak to me. And then if you go to the 60, 180, same thing. You've got triple. You've got the 180, you've got the 60-minute, and you've got a red bar, and it looks like it's going to go lower. The only thing, and I mentioned to you this morning, we've got support at 21.22, and that's a 120 support, a 2-hour support. So, can it break through that? Sure, it can. And we've got resistance that keeps printing. It's been printing all week, even way back. It's been printing.
And where is resistance? 2183,
Yeah, yeah, well,
2185.
yeah, 21.86 and 3/4. Yes.
So that corresponds pretty closely to the declining channel resistance that we see on the bar chart. And the fact that we're sitting at a level of support on the longer time period may be one of the things that corresponds to that Bollinger Band snap pattern that I see, that we could
Yes.
possibly move higher before we move lower. But the consensus of these charts is there's definitely more weakness than strength in SPX.
Yes, I agree, and this is interesting. The Russell trade, because you're talking about a Bollinger Band snap, and see, I just don't see that. And you mentioned that you mentioned a couple of times, it could go lower before it goes higher. But you look at every chart, we got a sell signal at 10 o'clock this morning, so that's not, it should be valid by now, but no, it's a 2-hour chart. My bad. At noon, we'll see if that's good or not.
Mm-hmm.
But you look at every chart has double or triple confirmation. You got 5, 3. Yeah, I'm sorry, 5. You got 9-minute, 3-minute, and a red bar. You got on the 30-minute, 90-minute, you've got 90, 30, red bar. On the 60-minute, you've got, of course, 180, 60, and a red bar. And now you got a sell signal on the Russell.
So
So
sell signal on the daily.
on the daily, yes. So, can it reverse? Sure, it can. But it's interesting that you show a Bollinger Band snap, and I was looking at that while you were looking at the chart, and I'm going, wow, that's a conflict a little bit to me now. You might read more into
Well,
that than
but,
I do.
but let's talk about that. So where's Russell trading? So let's look at the 60 180. Russell's trading at 1208, right?
Right,
Where is that 180 resistance printing? Where's 180 resistance printing?
1225.
Okay. Well, if we traded up to 1225, the 2 standard deviation lower Bollinger Band is at 1215.
Gotcha.
So that means that we would trade back above the Bollinger Bands before we'd move lower. And that's that
Yes.
cycle pattern that I think is very important to remember. So I don't see a conflict here, because frequently when we're trading these declining patterns like this, you're the first one to say, I'm just going to wait for it to move back up to the sweet spot.
Right.
Well, that move back up to the sweet spot is your opportunity to enter the trade to the downside, but it also may correspond to the signal we're seeing on the bar chart where there's a Bollinger Band snap telling us, it's highly likely that we're going to have an opportunity to take a sweet spot trade. Now, again, there's no guarantees with any of these, but that's the way I see it, and that's why I don't see a conflict there.
That's right. I'm sorry, I flipped that. We looks like on the shorter time frame, we've getting a sell signal on the SPX, which would be really nice for our custom thread we just opened up. So looks like we're heading back lower.
Okay.
Okay, good stuff.
Well, we
But
talked a little. Go
I
ahead.
love it.
Finish up.
I love the fact that, and of course, you're more in depth than I am on bar charts because I don't really pay much attention to them. I really go right here with AbleTrend. But it's when you is as good as you are, and subject matter expert. I'll use your term on bar charts. They sort of correlate. They're sort of are the same as as the AbleTrend charts. It's just the way you look at them, I guess. Because, like you said, you just opened my eyes up. The Russell might have a Bollinger Band snap. Well, it's got enough room for that to happen. It really does.
Mhm.
So before it hits resistance, so
And
correlates what I say.
and even if you're not looking at those signals, Bollinger Band snap or some other signal like that, because you've been doing this for so long, like I have, there are always counter trend cycles. There
Yes,
are always cycles that are going to move higher in a declining trend. And I think
that's right.
one of the things that is difficult sometimes for traders, especially if they're just starting out to be an active trader, is to look at a trend, a declining trend, and see something that will tell them to take a rising cycle within that trend, because
Yeah,
it
that's right.
seems counterintuitive. It seems like they're violating the code of the trend. You want the trend is your friend. That's a commonly understood expression, but there are opportunities, even if you don't take the cycle, just recognize that there will be cycles reversing. And it's the reverse cycle in a trend that gives you another opportunity to get into a trade.
That's right. Martin, it just let me expand this where you can see this, and this is interesting what you said. You'll pick up on it. This was when you were speaking yesterday, right here. Now that's a valid signal, but it was a counter trend trade in my opinion because of all the noise that was out there yesterday.
Mhm.
The Feds are going to speak, it's going to fall, it's going to turn around, we're in contagion, death spiral, all them words. I heard them words yesterday that we're not going to go any higher. I didn't take that trade, and I feel like beating myself up because of all the noise. Letters here, emails here. Oh, we're going lower. Did we go lower? No, we didn't. We took off to the upside. So you got to trust your charts. Got to trust them.
And sometimes it's hard to filter out all that other static and
Hey,
noise, but when you do, and you just trust your charts,
that's
if the
right.
signal does not follow through, it's not that the signal's wrong, but if
That's
there
right.
was no follow through on the signal, just know that you feel confident in how to manage that or how to exit out
That
at a
that's right.
specific stop.
That's exactly right. So I just want everybody to be aware. And once again, there's from 47.29 to 47. That's about a 10-point move yesterday that you held me out of, and now another move today. So
What do you mean
I'll do
10 point move? I would have stayed in that all the way to the top.
Yeah, you would have. But anyway.
Uh,
So I mean, and right here is another great example. I mean, a counter trend trade. I mean, technically that's not a good signal to take, but how many times we talked about it? If you go in here, what's your risk? And does it have enough room to move to the resistance? And of course it did. I mean, that's almost 10-point move right there.
it
About
does with
nine.
the type of strategies we trade, Michael.
That's
So
right.
so
Exactly. Be clear on that. That's exactly right.
yeah, so a trader has to understand how much movement will typically be required in order for them to have a profit that they would feel is
Yes.
appropriate.
Yes, sir.
And the type of trading that you do, very active in and out day trading, the type of trading I do, where I'll trade either a long call, a long put, or a spread, that 10-point move on NDX, that's going to be enough to take you out with the type of
Yes.
profit that we would be happy with.
That's right. That's exactly right. Good point. Okay. I'm done. I'll bow
All right.
out.
Well, thanks for the
No problem.
analysis. Appreciate it. And we talked a little bit today in our live trading room about our new margin buster strategy. Um, and it's kind of interesting to track that. We've now officially opened and closed one of those trades in the live trading room for a nice 10%, better than 10% return. We've got two other trades in play. So those of you who in the live trading room who are following along with that, um, it just proceed with caution because it's a brand new approach. It's a brand new configuration of how we put option legs together to form a spread. But this is what the art of trading is all about. If you understand calendar spreads and you understand diagonal spreads and you understand credit spreads and long vertical spreads and you understand market tamers, it becomes pretty easy to take a look at how you can configure two different strategies together or morph from one strategy to another. And that, in my opinion, is what the art of trading is all about and why we are here at Options Moneymaker. We're not here as much to teach you specifically what to trade. We're here to try to teach you how to trade and how to think about trading so that you can be an independent trader and be successful for as long as you choose to trade. So that's it for me.
Okay, Mark. Thank you.
Thank you, Michael.